Okay, I wanted to go over this video on Tasr. I know we did one just a couple of days ago, so this is kind of a follow-up. Usually I don't do a lot of the follow-up videos, but this one was kind of important to me because we had some questions the other day of when do you take profits, and this was a scenario that I kind of didn't go over the other day, so I think that this is a real important opportunity to go over gapping. So we were in the, let's see here, we were in the 18 calls for March for $1.10, okay, and we knew that the chart was setting up exactly the way we liked it. It was coming up together over the daily moving averages. It was getting in some consolidation, kind of flagging to go up. We had an RSI that was above 40. We had our wave count was positive, and our MACD was positive. Everything was completely positive on this, and on top of that, the stock had been beaten down for quite some time. So the bar was set a little low for earnings, and it had a good opportunity to run to this almost $21, which is a 200-day moving average. Now, what happened this morning is on the earnings, I kind of expected something decent on the earnings, but I did not expect this huge gap up. And so I guess my thought is on this, for my own rules, just wanted to share my thoughts with you. But anytime you get a huge gap on a spike up like this, I don't do anything but take the complete profit. I don't take half or take a quarter off or wait to see what. As soon as the market opens, I give it a few minutes just to see if there's a little momentum behind it. Within like a 5-minute window or less, you should know if it's going to continue to move or if people are taking profit and it's fading. Well, when it moves up like that on a huge gap to a 200-day moving average, you can almost assume that people are going to take the profit immediately, and that's sure what they did because it faded very, very nice from the open. It opened, it looked like it was above $20.50 some cents, almost 20.60, and then it closed at 19.38. So it had a considerable fade from the open. And so let's go check out the options. This is what I'll show you what I mean. I sold those this morning for around $2.50, and now even look at the bid-ask spread. They're 170 by 205. So yes, you would still have a little profit in there if you'd held them, but I sold them for 250. And so if this were to open down a little bit tomorrow, you would almost be losing everything that you had on that run-up. So anyways, on something that's like that, it's just a gift, and I take that immediately. If this had moved up in time and drew one candle after another over time and built slow momentum and moved into the position we wanted, then maybe you could feel a little bit comfortable about trimming some off or taking half off and then letting the rest go. But on a huge gap like this, I take all the profit immediately, and that's why, because of the fade, and because it was obviously up against a huge 200-day moving average, and it hit it exactly. So it worked out. It worked out faster than I thought. There was a little more profit in there than I thought, but that's all good. Now, for the second stage of this play, I'm not going to rush to get back in it. There's no sense yet. I want to see what happens. If this continues to hold this level that it broke through, which was this we'll call it 1923, where it's almost at now. It had such a huge fade. If it continues to hold and then kind of squeeze up to almost like a little pennant formation to take the next leg up, I can enter maybe a partial or half a position and then wait for the breakout for the next leg of the breakout. That's one scenario I can play. If it fades back down, I want to look for this old area where it broke out from and see if it can hold up in here. If it can, that could be another opportunity. And last but not least, if this just continues to move up very hard, what I'm going to do is I'm going to wait for it to break the 200-day moving average, not chase it, mind you, not chase it, but wait for it to break the 200-day moving average, and then over time, when it breaks through there, it should likely come back and test this area of the 200-day moving average and see if this area now holds up, because this was the resistance, and now it should become the support for it. And if that does happen, that is the key opportunity to enter for the next leg up, which could show us, let's see, halfway would be around 24, and then the remainder of it from way back, I'm not going to chase it back, but we had the line here from about 28. So if this shoots up to, break the 200-day moving average and then comes back and starts to hold this area really nice, that's a great opportunity to enter. And then you enter for another month or two down the road and get yourself a little more time, and then let this next leg of the play develop. So anyways, I just wanted to go over that. I like to go over any of these, whether they're winning strategies or whether we've had some losses, just so we can understand how the play happened and what to do or what not to do next time. So I was really pleased with this one today. It went a lot faster and further than I thought it was going to go in one day anyway. I kind of expected to go to the 200-day moving average, but not as quick. So it turned out to be a good trade, so keep your eye on it. It looks really good, and it might be very, very good going forward, but let it settle down wherever it's going to go. If it's going to come back down and fade a little further, or it's going to go up and then settle back down and test this new area again as support, and then enter the trade. And we'll go keep our eyes on it, and I'll post another video of this here in time as this trade develops for the next leg. So it's a good trade, and I hope you did okay on it.